we're live. Oh,
Right, we are live, our hangout. So, hi, it's Judith Holloway here from Tree Frog Properties, and welcome to the interview.
Oh.
I've got a huge smile on my face here because I can't wait for my next guest to be revealed. Briefly, Tree Frog Properties has a property portfolio of HMOs, and I can't get my words out at the moment either. And we're looking to expand into other areas. We're also looking at commercial properties combined with residential in Gloucester and surrounding areas. So you know that you are in the right place if you're interested in property and want to know more about it. And of course, take that all-important action. This interview is going to be so valuable to you as you learn some incredibly useful information about raising private finance for property. I think it's hugely important because maybe you're starting out from scratch with no money at all. Maybe you've got a pot of money to use, which is fantastic. At some stage during your investing, your own pot of money will run out. So I'm going to introduce my guest today, Susannah Cole. And just quickly, hi, Susannah.
Hello, it's very nice to be here, and it's really good fun. My first ever Google Hangout.
Excellent. Well, if you hang on just a minute, I'm going to formally introduce you. Okay, so Susannah is a highly respected person in the property investing community. She's a well-established property expert who has implemented very successful flipping strategies within a buzzing market. Susannah also has a substantial property portfolio that includes HMOs and single lets. Now, Susannah started the Good Property Company in 2011 as a kitchen startup, a kitchen table startup, in fact. And in that time, her team sourced, bought, or sold, or let out more than 200 properties with a value of 45 million and an agreed purchase price of 30 million. Now, Susannah loves property and loves to give back. So I know from today's interview, you are going to get huge value. Now, one thing is that I'm going to say, and I've put it down also, is that Susannah cannot give formal legal or financial advice. And what this is about, this interview, it's about her personal opinion. And we're going to be benefiting hugely from her personal experience. So welcome again, Susannah. This is amazing. So what I'm going to do is, before we get started, I know there's going to be a lot of people here watching live or even on the replay who are struggling with raising finance, whether it's starting from scratch with no money at all, or they need more money to fund their latest acquisition. So what I'd really like to find out first and foremost is, can you walk me through the process that you went through to get to where you are today? Because 2011 to 2016 is not a huge amount of time, is it?
No, it's not. But property can do that because, of course, you're buying quite discounted properties. You're buying big kind of lumps, if you like, with big lump discounts. And, of course, the rent roll can be rather super and the buy to sell can be rather super. So it's not like you get a 2% pay rise and have, I don't know, whatever, a few £1,000s a year extra. Every time you buy a property, you're kind of giving yourself a massive asset boost, an asset increase. So how I started, like many people, I mean, some folks may be listening and have never done anything yet and are thinking, oh my goodness, I'm not doing anything. What am I doing? I'm reading all these books. I spent a whole year reading books thinking, this is terrifying. I have no idea what to do here. I know property is how I want to go. I know property is going to be the future for my family. I was, I'm head of household, which is I think is kind of a more polite way of saying single parent. My children were in their early teens. And I knew that my job, albeit a decent level job, was never going to supply the family what we wanted in terms of securities. So I've never been particularly interested in the money side. It's always the security side. Excuse me, big cup of tea coming up.
Oh, excellent. I've got my water.
There we go. Excuse me. And so I had no intention of raising any money at all. I had no intention of just doing anything other than buying myself a portfolio. And at the time, I thought £1 million portfolio was like a massive deal. And I just thought that would never be achievable, or maybe I'd achieve it, but my goodness, how far would that be? And now I'm like, oh, wow, that's really cute. But So I had no intention, if you like, of working with other people. And I think a lot of people get into property thinking I'm just going to buy some properties, and then you slowly develop and grow in the business and realize you are better together. Everybody wins together. So I worked full time, and my kids were kind of 10 and 14, that kind of age. So they needed me, but they didn't need me in every second. They needed me breakfast and supper, bedtime, and Sundays and Saturdays. They were too cool for school, and they didn't want to know about mum, but Sundays was still roast dinner. So I did have some time. I had a full-time job. I was marketing director of a museum, and I loved it, but I got bored being a prisoner in an office. You know, so there was, you know, it was a really great job, really amazing place to be, but I don't want to be in an office. I don't want someone else telling me what to do. And I really always struggled with that. So I started off by buying a 1-bed flat, 79,000, revalued it at 120. Fine. I then bought a 2-bed house from auction with a mortgage. Don't do that. Buy it with bridging. And it had an aluminium roof because I didn't put my head above the parapet, if you like, and have a look. It's still got an aluminium roof now, but, you know, I nearly had a heart attack. And I bought that for 85,000, and it was revalued at 130, and I did the 7 grand refurb. And then they put the 6-month rule in. So at that point, I was like, no way am I going to go that slow. I pulled out 60 grand of my own money from my personal mortgage. And there was no way I was going to do 2 properties every 6 to 9 months. That wasn't part of my plan. I wanted this kind of security and safety for my family a lot faster. So there was only one option, which was to say, well, I've run out of money after 2 deals. It's going to take me a little while to pull that money back out. Now I need to go and work with third-party people to supply me with the funds so that I can then go and buy additional deals. And so that's what I did. I went to Bristol PIN, Property Investors Network, which is owned, if you like, and run by Simon Zutzi. And I decided to run a fundraising plan, and I raised £600,000 in 14 weeks, and then continued to buy a portfolio. I bought a portfolio worth 1.8 million, which now I'm like, oh, that's really cute. I don't mean in a derogatory way, but you know, at the time it was like massive, and now it's like, oh, that's like my baby beginning one, and then I jumped out of my full-time job. So that was kind of how to move from corporate, if you like, through bringing in resource of additional money. I mean, I paid a lot of interest, you know, like many people in the industry, I started off by paying 12%. That's huge. So massive. So I borrowed 600,000 quid and paid 72 grand to other people my first year. I mean, on top of buying a whole bunch of properties, doing renovations, and being continuously skinned like any property investor is at the beginning of their career. Oh, so absolutely. Just be aware of how expensive funding can be if you don't think about the rates you would like to kind of privately agree with somebody.
Oh, absolutely. And I think, you know, you've given just an awful lot of information in this introductory bit, and I'm sure because you just are like a steam train. I mean that in the nicest possible way, Susie.
Yes.
You just rattle things off and you go at one hell of a speed. So I have a feeling that a number of people are going to actually be going back to the beginning, or even all of this to recap over that. So you've just talked about being very aware of when you borrow from other people, you know, the rates of finance.
Yes.
So what other important things did you learn along the way? Because I'm sure that was lesson number 1. What were the other things then?
Know your numbers, and actually know that people buy you, not the deal, if you like. So so people kind of do an evaluation on who you are as a human being, or who they perceive you to be as a human being. And I used to get like a complete frog, you know, oh, I can't speak anytime anyone gave me, because the responsibility is huge. Kind of having stewardship of somebody else's money, obviously with a legal agreement. I got legal agreements written up by my lawyers, and always make sure that you have a legal agreement. But the moment you take on board somebody else's money, it's terrifying, because I can kind of mess up with my own money. There's no way I can mess up with somebody else's. So number 1 is people buy, or people decide to work with you, and then they decide whether the deal or the arrangement is appropriate. So they're going to make a kind of instinctive choice. And I think people just could feel that I would be terrified and like I'd be unable to speak with that frog once they decided to pop me some cash.
So can I just interrupt there? And ask, because, you know, you're saying you were absolutely terrified, and you know, you couldn't speak and all that. So how did you actually get over that? Just a quick aside before we get to the main bit.
I never did. I mean, I don't fundraise anymore because, of course, my portfolio is big enough. It now produces the funds to buy more. I never did. I never got over that scary moment of thinking, I don't want to pick up the phone. I don't want to pick up the phone and ask people or start to incubate relationships in a fundraising campaign. I used to feed myself Nutella. It was 2 phone calls, 1 spoon of Nutella, 2 phone calls, 1 spoon of Nutella. Because what other rewards am I going to get? Because you don't get the money straight away. It's usually an incubation period of 5 to 9 touch points, if you want to call them touch points, which is really about developing trust and a relationship. And so I wanted to figure out who they were as much as they wanted to figure out who I was. And it's usually 5 to 9 meetings, phone calls. I don't count email as a touch point. On average, it's a statistical game, this, in some ways. On average, people, it would be an average of £50,000. And on average, I used to screen people with 3 questions, which is, what's your objective? So what do you want to achieve? And we'll go into that in a moment. Okay. What's your time frame and how much is your pot? Because I was trying to figure out what different ways they're going to work in property. I was never trying to shoehorn them into working with me, but if the objective, the time frame and the pot could then fit into a strategy that I could do to either buy and sell or buy and refinance and pay them interest. So basically, if there was a fit within the context of the parameters of the deal that I was doing, then I might suggest they might like to consider working with me. But for example, I talked to one guy, bless him, I won't name him, but he said, I want 33% return in 3 months. And I was like, good luck, because yeah, exactly. My projects can't deliver that. So I even consider being able to kind of suggest I could deliver that. So I knew what my projects could roughly deliver, you know, with all the usual speed bumps in property. And I knew how much I felt, because I do a lot of research, how much I was buying the property for discounted, how much I was pretty damn sure it was going to refinance for, and then how much profit would come out. So I knew really what I could borrow, what I could pay in interest and what I could pay back. And I kind of roughly would look at maybe the first year rental profit could go as interest to the investor because I'm going to own it for the rest of my life. But I had to be very sure that the properties were discounted. So I guess my lessons, and there's tons, and I could talk all day about just this, and you can just go, Suze, get off. Okay,
Susie, one more then. One more of these lessons then. A really good one that people will find useful.
So this,
I know all, sorry to interrupt. I know all your lessons are really useful, but you know, something that's really sort of juicy that they can get their teeth into so that they won't make the mistake again. Yeah?
Can I actually give this as, I'm not a big mindset girl and I'm not a big hippie despite living in Bristol and having, you know, ran a fair trade business. It's mindset. When you are looking, or an understanding of the landscape, when you're looking for funds, it feels like there are very few funds around, and why would anyone invest in you? The reality is there are very few deals around, and there are an awful lot of people with money struggling to think about how they can invest that money effectively and with relative security. Right. And so if you can provide a case study that shows that you've got a good track record, statistically speaking, your projects come clean, you give great amount of research detail on the particular project if you're doing a particular project, and provide security and provide an acceptable but not over the top interest rate or joint venture agreement, there is so much more money looking for deals than deals looking for money. But it doesn't feel like that at the beginning.
Okay, no, that is absolutely fantastic. Thank you. And I'm going to have to go back over this replay to pull out all these points because they're coming absolutely fast and furious. So thank you for that. Okay, on to question 3 then. I know maybe that you don't do this now, and you've already said that because your portfolio tends to fund what you're doing, but actually at the beginning, what stages did you use, particularly at the beginning, to consistently keep that fundraising going? Because I'm sure that, you know, there were certain, you know, you've talked about blocks and things, but, you know, it's almost as though there's not a linear approach, but I'm sure from the way that you operate that you've got certain stages that you hit in order to make sure that you get everything through across to the line.
Yes. Are you ready? Yeah. I've actually written them down. So if I glance down here, it's to make sure that I don't miss a stage. Okay. So the first one is screen your investor. So that is really, you know, you can't squeeze a quart into a pint pot or the other way around, can you? You can't shoehorn somebody into something. So just to make sure there's a fit and the fit is totally as it should be. So screen them. And I talked about that. What's your time frame? What's your objective? What do you want to achieve? And what's your pot? And sometimes the objective can be, I want to buy a camper van next summer. Okay, that's in 9 months' time. How much is that going to cost? 20 odd grand. How much have you got at the moment? 200. Okay, so that's looking like you want 10% return within about 9 months. Do you see what I mean? So people don't always go, I want this much percentage. They say, I want this thing or this holiday or the children at school or whatever it is.
Yeah.
So number one is screen to make sure that what their objective timeframe and pot is, or are, sorry, fits what you believe you can deliver strongly, because you can't make a fit if the fit doesn't work.
Yeah.
The second thing is to pitch. And typically what I would do once I'd screened somebody and thought, okay, they could potentially be an investor with me, I'd put them into my next little database from like my main database. And when we're talking database, it sounds very fancy. I'm using an Excel spreadsheet. I ain't fancy on the IT. And then they're kind of my medium leads. And so I want to have a conversation with them, probably on the phone, to say, look, I'm running a fundraising campaign. There are a number of ways we might be able to work in property. This could be one. Can I describe what I'm doing? And if it's of interest to you, can I get to a first meet with you? And so I do meet number one. And then on meet number one, I want to say, okay, here's all my information. So that's really the initial pitch, and also to very much understand where they're at. Give them all the information, show them all the legal documentations, all that kind of malarkey, and then say, right, can we book a meeting? Because I don't expect them to say yes or no on the first meet, because it's too much of a thing, isn't it? It's too much in your head. Oh, I don't know, let me think about it.
Absolutely. And I think also they're still getting to know you, aren't they? And you've got to find out whether you've got the same values, whether you're singing from the same hymn sheet, etc., etc. Yeah,
totally. So we've got screen, then we've got pitch, and then I will book a second meeting at the end of the first meet to say, look, here's the information. We might email a few things between each other, but could we meet 1 week from today just to talk further about the opportunity of working together? And they very much know it's framed as a fundraising meet. And so then it really in the second, and in between the first meet and the second meet, as you say, you've gotten to know them a little bit, and you are listening out for the third stage, which is veto, which goes back to choice. Not all investors are alike. Some investors are amazing and they're so lovely to work with. Some investors, for everybody's happiness, you are best off just saying, look, I don't think, sweetheart, we need to work together. Good luck, but please not for me. So you have the veto button all the way along, and just listen out for language, listen out for kind of demands that are too, onerous, or, if the gut isn't right, don't work with them.
Yeah. I think you're totally right on the gut thing, because sometimes we're so desperate to get the money, even if our gut's screaming out, no, 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 we plough ahead because we're so desperate for the money. And I think it's really important, as you've said, that you can veto at any stage and not be a desperate buyer.
Yes, totally. And so you could call veto, and we actually have a tab on our list that says veto, because mentally, how else do you place them in your head? And I always thought that was a really kind of rude thing to do, but actually what it does is just allows you to understand where you've sort of placed somebody for this working relationship. No, that relationship isn't going to work out that way. Let's put them on the veto. You still might enjoy a good chat with them, but you ain't going to work together in a fundraising capacity. Okay. And then so we've got screen, pitch, veto, which actually continues, then ask. So on the second meet, I would usually put the ask and say, look, I'm looking to raise funds. Is this something you might be interested in? Quite openly, because if you forget to ask, they can't say yes or no. And then,
oh, absolutely. And I think it's really important, because you've set the seed anyway, because you've set it up as a fundraising meeting, so they know what the whole subject is anyway.
Yes. Yeah, with no pressure, and it's okay for them to say no, which comes on to number 5, which is they can decline. And I found that 50% of people that I screened and got into meeting 1 and meeting 2 declined, and 50% of people said yes. So your veto is effectively your decline, or their veto is their decline. So you've got screen, pitch, veto, your decline, their decline, and ask. And then they pledge if they say yes. So if they decline, they stop there, and you either figure out another way of working together or just hang out and be friends. Next, they pledge and say, yep, I want it, and they name a sum. And I've only ever in my entire life so far ever had one person who pledged a sum of money, turn around and not deliver on it. And it is frustrating, but it only happened once. So they pledge, and you just ask the exact amount and date. and then they pop it across to you once you've done all the legal documentation. And you always make sure that you advise them to take legal advice, and so they should. So those are my stages, which are screen, pitch, you veto or they veto a decline, ask, pledge and pay. 6 stages, with the veto being either which way, your way or their way.
Oh, that's absolutely fantastic. And I think to have a system like that, you know exactly where you are. And one thing that you just said, you knew that 50% of the people that you spoke to declined and 50% went forward. And I think,
yeah,
you know, it's something that you said earlier on, knowing your numbers. And it's not just about the pounds, it's about the numbers that you are operating with when you're speaking to people, because you just said it's a numbers game. So which leads me on to the next question then. Oh, and we haven't rehearsed this at all, have we, Susie?
No, but you know we talk numbers. Everything is a numbers game in property, and whether you like people.
Yes, absolutely. So I know that you've alluded to it, but how do you keep on top of all of this information?
Okay, so you're talking to a girl who's on her very first Google Hangout, so it wouldn't be that I'm an IT queen. Should we just say that? And I'm kind of like quite excited about this. Personally, I use Excel spreadsheets. Now I know some people use data, kind of customer management systems, don't they? CRMs, customer relationship systems. Friends of mine use lessannoying.com and Salesforce and all that malarkey. But you're not actually talking about large numbers of people. I mean, I had 14 first coffees with people and raised £600,000.
Wow,
so
impressive.
Sorry, forgive me, sorry. I had 28 coffees, I'm so sorry, in 14 weeks. Sorry, that's my maths. 28 coffees in 14 weeks and raised 600 grand. So it's, you know, I personally have a little spreadsheet that is kind of my whole list of everybody I ever met in property and kind of had chats with them. And then then remember, I do my screening. What's your objective? What's your time frame? And how much is your part? And then if they're warm, you know, so their objective might fit mine, but they haven't said yes or anything, and they've got a pot that might be interested in working with me on, I'll move them to a kind of warmer lead. And then I start walking and literally just moving them into another little Excel spreadsheet. And then I just record date called, conversation, date met, conversation, next step. And you might think that because the investors have the money, they're the one that's going to take the lead. They just don't. So you're always the one to say, shall we meet again on this date? Shall we, what information would you like? Let me send all this stuff across to you. And then the agenda for the next meet will be this, which will be talking about working with me financially. And this is the date that we'll have the meeting.
Fantastic.
So yeah, you drive the relationship forward.
Okay. And from what you said, operating on a simple thing, I know Excel spreadsheets are not simple, but actually just making a spreadsheet to document all that is the easiest way forward. You don't have to do anything more complicated.
I didn't, no. And what's really interesting, I found statistically, being a total numbers geek, is I thought that, you know, when I raised the money, and maybe the following year to have to go and raise the whole thing again. No, what's really interesting statistically is you only have roughly a 20% attrition rate. At least that's what I discovered. And when I talked to loads of other people who've worked on raising money as well, they're really similar. So let's say you raise $1 million in your first year, even though like I had 1 year legal agreements. And so I'd work with people well in advance, like 6 months in advance, and say, so what are your plans for year 2? Would you like to work with me again? And I repeatedly reduced down the interest rate to a much more acceptable level by kind of 2% a year, so 12% to 10% to 8% to 6% to 4%. And everybody stayed in, but almost you have a 20% attrition rate where they're like, because they've done all the due diligence, they figured out that you pay. I like to pay everybody monthly so that it reminds them that I'm actually paying. It's just a standing order set up. You know, somebody said, oh, thank you so much for being so honest and paying on time. And I was like, it was a standing order, you know, but it just reminds people that you're paying them, which I think is really useful. And it doesn't roll up the pain for you to the end of the year where you go, ow, you know, that's expensive. So yeah, only roughly 20% of the funds you raise in year 1, in my experience, will come out at the end of the year. So let's say you raise $1 million in year 1. Year 2, if you want to maintain that $1 million and recycle it through the properties you're doing, statistically, you're only likely to need to raise about 200,000. Isn't that a relief?
Wow.
To be honest. Yeah.
That is amazing. And yeah, and because you've done it so many times, you're really clear on your numbers, which makes perfect sense. So, which leads on to the next question. Again, we haven't rehearsed this. This is brilliant. Thank you, Susie. This is amazing. Okay, so are there any magic ingredients, if there are any, that work in raising finance at all?
Yes. Well, they're not magic. They're just practical. Sorry, I'm like, but they're just really practical. So the first thing is what I said before. They definitely decide to work with you as a human being. So me, I always prefer complete openness. When I was working and I wanted to raise money in order to, I loved my job, but I didn't love being trapped in an office. So that was fun, but that bit wasn't. So I wanted to leave being trapped in an office. So I would do things like, here is my personal mortgage statement. Have a look. You're standing in my house. They would physically meet me at my kitchen table. One of the reasons for that was efficiency. I didn't have time to drive to meetings. I needed to get them here. They could have a look around, see how I lived, see how my children behaved. I would show them my payslip, before I left my full-time job, and go, look, this is how much I earn. This is how much I've got in my personal equity. Here are my 2 little baby properties that I own. This is what I bought them for. This is what I sold them for. Renovated them for. This is what got revalued for. And here is the equity, so that they could see, because their number one question is my money safe? So they could see that I had assets that, should worst come to worst and everything go horribly wrong, I could sell those assets or whatever and refund. But openness, to my mind, is number one. And then other magic ingredient or magic step, if you like, is following through. So loads of people go to property events, and I did, and my plan was always to collect 10 interesting business cards every single time, and I would follow up every single time, and I would make sure I spoke to every single person and write notes on like recycled paper, write the date, the name, and what we talked about, and the other end was, just recycled paper.
Or in the back of an envelope,
Yes, and we used to have a chat with Susie folders that were like up to there, and I'm 5'2", and they used to go just under my bust line in folders. That is how many conversations I had in the first 3 years of my business. So it's not assuming meeting someone at a property event is going to seal the deal. That is just a hello, and then it's follow up, follow up, follow up. And then my third one is more a tip. I found, and it's just a tip, let's say some people get very excited and be like, oh, I really want to give you my money. And I'm like, wait, slow down. One chap who's really lovely guy had 600,000 quid, but that was all his money. He's like, I want to give you 600,000. I was like, whoa, 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 whoa. No, because what if I didn't manage it well? What if it went wrong? So what I wanted to do was take 1/5 and test that out. So I would always say, start on a smaller amount of money than they've got. A, because you're just doing good service to them by not allowing them to take risks that are a bit silly, because your property is risky. And B, because it engenders trust. If you offered me 600 and I said, well, shall we start with 120? That would actually make you feel a lot more trusting in me long term. Absolutely. And so year 2, you turn around and go. And
of course you could speak as well. You didn't have in your throat that you talked
about. Yes. I still get super scared at like anything, 20. and year 1, I had a lovely lady give me 3,000 quid. And, you might be like, well, what was the point of that? Well, year 2, I went back, and this one, the interest was rolled up with the check and the interest. She gave me a gin and tonic, and she said, I've got a real problem. I was like, oh, what was that then? She said, I've got £30,000 and I don't know what to do with it. So I walked out. I walked out with another legal agreement signed and a check for £30,000. So I took all levels of money.
Absolutely. And you never know, if you're starting with a small amount, you never know what they're holding back.
Yes.
And you might be able to help them even further. So that's absolutely brilliant. Which leads me again onto the last question, and then, if we may, another short tip. I know you've given one already. So if you had to say one thing, and one thing only, that's really helped you build your fundraising pipeline,
yes,
what would that be?
I'm going to call it hunger.
Okay.
I don't mean greed, because I've never been interested in the money. I'm interested in security. And so for me, as head of household with 2 little babbities, or responsibilities as I've always called them, double the trouble and double the hugs. I, as sole parent, didn't have a plan B. What if anything happened? I once was involved in a car crash, and I was in deep shock, shouting, or wittering, what would have happened to the kids if anything happened to me, like non-stop until the ambulance man got me out of the shop, because that was my number one driver. So not greed hunger, but just hunger for security, to make sure that my family was very, very safe. And that hunger, or that need to make sure that my family is very safe, because there was no plan B. So what would have happened to my kids if anything happened to me was a really important question, meant that I was happy to get really uncomfortable. I was happy to be British and ask people for money. I was happy to take their cards. I was happy to phone them up. I was happy to do all the admin. I mean, I had to feed myself Nutella, honestly. And at one point it was condensed milk, you know, because like,
oh my goodness.
I know, sorry folks if that's disgusting, but it's just telling you the truth. Like, because it's stressful, and who likes to ask for money? I mean, nobody wants to do that. But I wanted security for my family more than I was prepared to not undergo the social embarrassment, if you like, of being British and saying, look, I can do this stuff in property, you'll benefit from it. Would you be keen enough to invest in the kind of work I do?
Okay, that's absolutely fantastic, because, you know, you're getting out of your own way, literally.
Yeah, yes.
So, okay, so thinking about the speed at which we've rattled through things, I'm going to ask you a top tip, and it could be a chill pill. I don't think that's in your vocabulary.
I'm writing down chill pill just to explore what the word means.
Right, okay. Or it could be your best motivator that consistently works to get you back on track. So chill pill or motivator? I have a strong feeling it's going to be the latter.
Motivator. So what I'm doing at the moment, I'm really, well, there's loads. I work with really cool people, and I love seeing when other people flourish. Do you know what I mean? It's just like when anyone makes a little breakthrough, whether it's like Kimmy's opposite me just now, making sure all IT works well. And when she has a breakthrough, or anyone else on my team, that is so much fun. So there's definitely the thing about a team and watching people develop. I love that. But motivator for me at the moment, I'm reading some really cool autobiographies of people that have grown really big businesses and had all the usual ups and downs of being an entrepreneur. So Sheryl Sandberg, Chief Operating Officer of Facebook, the woman's amazing. That book, Lean In, is stunning. And it's for men as well as women. Then I've forgotten her name, which is appalling of me, the woman who developed up from an eBay business up to a 28 million turnover dollar business in clothes. And her book is called Girl Boss. It's fabulous. Girl Boss.
Okay.
But I've got stuff for the guys too. I was just reading Elon Musk's biography, the guy that did PayPal, Tesla, and SpaceX. I mean, you know, this guy doesn't mess around. And I'm currently reading the book Winners. Who was the chap that was the Labour Party? Alistair, the Labour Party spin doctor.
Oh, crumbs. The name.
Alistair Campbell.
Right,
there you go. And I just find that really interesting. So kind of books that are about how people in an entrepreneurial sense overcame obstacles and push forward. I just find them really inspiring. And a really cool book, Peak Performance. I saw him speak at Hay on Wye Festival, and it's about the psychology and pushing to the edge without breaking yourself for people who are at the top of their game, whether it's business or whether it's sport. And then my chill pill is probably weightlifting. I go get trained 3 times a week by Sunny, who I supported at the Olympics.
Yes, I saw all your posts, and I've seen you doing the weightlifting. It looks amazing, Susie.
Well, you can't think or worry or stress about property or investors or anything else when you're picking up a heavy weight, can you? You just got to concentrate on putting that thing above your head. Absolutely. So that's cool.
Oh, absolutely fantastic. Well, I have got a huge amount out of this, and I'm going to have to go back over the replay to listen to so many nuggets that you've just delivered and delivered and delivered. It's been amazing. I think for me though, I've tried to jot down some notes, and honestly I don't do shorthand, so it's a bit scruffy, but I think the 3 things for me came out were the fact that, you know, you've got this hunger, and the fact that, you know, you wanted to be the one to get security. It's not about greed, it's about security. And that is, you know, a real instinctual thing. Yes. And I think having that almost like linear process of when you are talking to people, so you know almost which pot they're in. Yeah. I think that is really, really useful. And I think the thing that was interesting as well was that attrition rate. The fact that, you know, you might borrow $1 million, but in subsequent years, it might be a fraction of that. So really quite eye-popping stuff. So thank you.
Oh, you're welcome. The only thing just to add is always have legal agreements. Always advise your investors legal advice, and just make sure just everything's written. You know, it's only, and give them security, because that's not fair otherwise, really, I don't think.
Oh, absolutely. And just thank you so much for your energy that you've brought to this. It's been an absolute blast, Susie. And you know, stopping you to ask the questions has been quite interesting.
Well done, woman, for managing me. Oi, Suze, get on with it.
Oh, yes. It's been brilliant. Thank you so much for such a fantastic interview. It's been brilliant. So I'm going to sign off now. So I'll flick you back and you say bye-bye to everybody.
Thank you.
So thanks once again, Susan.
Thank you. And thank you, everybody. And
all
hopefully,
right.
Good luck.
And one last thing is, where can people connect with you if they need to?
A couple of different routes. Our website is thegoodpropertycompany.co.uk, and on there we've got tons of resources. We've got loads of free stuff for people, and also things like our fundraising packs and stuff like that, where really I've written out all of that stuff for people. So you're welcome to go there, or private message me on Facebook, Susannah Cole.
Okay. Oh, that's absolutely fantastic. Thank you for being so generous with your time. And I'm going to stop the broadcast and wish everybody well. Thanks, Susie.
Thank you.
Bye.